Morning at 9 a.m. from a contractor that I met at the Home Depot parking lot in Princeton, New Jersey back in February, out of the blue. Got his card, boom, Matt, need funds. Guys, get out there. Don't be shy. Just get out there with your cards, and that's your new warm market. I think I jumped on at the end of that one, but if you're a decent person, everybody becomes your warm market, don't they?
Absolutely. Absolutely. Through care and education, right? And that comes from your reason why. We talk about it all the time. Good stuff, Matt. Alrighty, guys, just waiting for the green light here, and then we're gonna get rolling on today's huddle. As I bring in today's quarterback, he's a not just a dear friend of mine, but our senior funding director with David Allen Capital and Bank Breezy, making sure that all of our clients get those offers, get the communication that they need. He's doing pretty much anything that has ever any magic that's ever been worked has come from this guy. He's been in this space for a very long time. He uses that knowledge and that wisdom and that personality to really just make everything that we have happen. So without further ado, we are live and ready to go for today's huddle with our quarterback and speaker for today, Mr. Wade Cordell. Take it away.
Hey, thank you. You said that exactly how I paid you to say it. Thank you very much. Well, listen, and I mean it. Thanks for being on here every day. I know I say this every week, but I look at the numbers that are on these Zooms, and I just scratch my head. I don't know. I need to have more people in my organization than we got on here. Uh, totally get on this call on a weekly basis. I know we got a few on here. Todd, I saw you. Fantastic. But again, my name is Wade Cordell. I've been with David probably since the beginning. I had my own funding company and met David and fell in love with his ideas, his personality, what he wanted to do, his energy, and knowing his past successes. I wanted to be part of it. So a few years back, he and I built out what's called the Bank Breezy funding platform, and I have run it ever since. We've got a huge team that works every one of your files. I get excited because I know that 1 out of 10 business people that walk into a bank cannot walk out with $10,000, not because of credit necessarily. It's just they don't have maybe collateral to put up, and it's really, we are a blessing and we are an answer to prayer for a lot of folks. Before I get into what I'm going to talk about today, I'll give you a quick funny story. Take these things that we give you every day and write these stories down, so when you talk to someone in a particular industry, you'll be able to use that. Hey, just this week we funded this. But this is the nail salon in Ohio. It's a broker that we hear about all the time, Lynn Hot Trend. The company was actually looking for 40,000 in working capital to strengthen operations. They wanted to purchase inventory, hire additional staff, and really just increase their overall cash flow. Well, the business has really excellent credit, but their revenue kind of fluctuates anywhere from 22 to 36,000. They wanted to get 40,000 with good credit and a fluctuating revenue on a monthly basis. I knew that was going to be not so difficult to do. We finally settled on 39,000 flex rate 12-month offer, which they accepted. We had incredibly great prepayment discounts. They within 2 hours from the time they said they wanted to move forward, we're able to fund it. And once again, Lynn Hahn, he's getting more and more and more involved in the everyday activities of his clients because he's getting so many of them to come to the table. Today's topic is really going to be about revenue-based lenders and what their appetite really is for a file. Because what you're going to find out is a file that looks good to you and me may have a different whole look at different lenders when they look at it. When you got 20 lenders look at it, there could be 20 different thought processes going through that. So I'm going to share my screen real quickly. and you guys tell me if it is a full screen.
Looking
Can you
good.
see that?
Yep. Wait, no, there we go.
All right. The question is why revenue-based lenders change their appetite for industries and why offers vary so much from one lender to the other. One of the most important things to understand in the revenue-based funding industry is that the lender appetite is constantly changing. A business that requires multiple declines today may receive several that receives multiple declines today may receive several competitive offers 6 months from now, even if very little is changed on that business for that business itself. And why is this happening? Well, every lender manages its own portfolio of industries, like an investment firm. They don't want to put all their money in one stock. Revenue-based lenders don't want to put too much exposure to one particular industry. For example, if a lender funds a large number of roofing companies, restaurants, or trucking businesses over a short period of time, they may just temporarily reduce or even stop approving businesses in that industry for a period of time. This isn't necessarily because the industry is performing poorly. It simply means that the lender has reached a level of exposure that they're comfortable with and for those industries and want to diversify their portfolio. 6 months later, many of those advantages have paid down. I mean, some advances that they may already have paid down, or they don't have any positions at that point. The lender's portfolio may have changed. Many of the folks that they funded, as I said, like in those industries, are now they're off the books, and so they want to go and they want to get aggressive with those industries again. This is why timing matters so much in revenue-based financing. A decline today does not necessarily mean a decline forever, and that's why we always talk about time can steal deals. Now, there are other factors that affect the industry appetite. Lenders also adjust their underwriting based on whatever the current economic conditions are out there. I remember during COVID, it was very difficult to get a lot of offers, but we worked through it. Industry performance trends is one of them. Default rates within a specific industry. I remember, and roofing was really a huge default sector in 2022 for some reason. But now our lenders love it. There are seasonal business cycles, changes in investor capital. You got internal funding goals, portfolio concentration limits, regulatory or compliance changes. As these factors evolve, so does each lender's willingness to fund certain types of businesses. Now, why an A-tier lender may dramatically outperform a B-tier lender? Many merchants assume that all lenders evaluate files the same way. They don't. They absolutely do not. Every lender has its own proprietary underwriting model. They got their own pricing strategy and their risk tolerance. For example, an A-tier lender may look at a file and see strong cash flow, excellent deposit consistency, long time in business, healthy average daily balance, low existing debt, strong personal credit, and low overall risk. Because the A lender may view the business as a low risk opportunity, they may offer a much larger approval amount. They may have a much lower factor rate, longer repayment term, smaller daily or weekly payments. Meanwhile, a B tier lender reviewing the exact same file may place greater emphasis on the different risk factors like industry volatility, recent bank overdraft, existing MCA balances, credit score fluctuations, seasonal revenue, deposit patterns, average ending balance, bank balances. And as a result, the B-tier lender may reduce the approval amount. They may increase the cost of funds. They may shorten the repayment terms, or they may just decline the file altogether. Why the difference can be so significant? It is not uncommon for an A-tier lender to approve a merchant for significantly more money at substantially better terms than a B-tier lender. This happens because A-tier lenders generally have access to low-cost capital and reserve their most competitive pricing for businesses that fit their ideal credit profile. On the other hand, B-tier lenders are often taking on additional risk. To compensate for that, they're going to charge higher factor rates. They're going to approve lower funding amounts, and they may require more frequent payments. Neither lender is necessarily right or wrong. They are simply pricing the file according to their own underwriting philosophy and portfolio objectives. That's why the bank breezy funding platform that we provide for you gives you, I'm talking about you, the broker, an industry advantage. Multi-lender platforms like Bank Breezy, and there aren't, if there are out there, they're not very competitive. It creates great value. This is exactly why submitting a file to only one lender can leave money on the table. It will actually leave money on the table every time. Every lender views risk differently. One lender may decline a file, another may approve it, another may double the approval amount, another may provide substantially better pricing. The goal of a true multi-lender funding platform is to allow multiple lenders to evaluate the same file. So the merchant has the opportunity to receive the strongest available offer based on current market conditions and each lender's unique underwriting criteria. That competitive process often produces better funding amounts, more favorable pricing, and repayment structures that better fit the merchant's cash flow. In our industry, guys, there is no such thing as a one-size-fits-all lender. The strongest funding outcome is often achieved by matching the right business with the right lender at the right time. That is what makes the Bank Breezy platform so valuable. And if you are new, you need to understand that you can go out and get yourself a contract or two. But it's usually you're going to get it with the lenders that we probably wouldn't even let on this platform, or maybe we let one or two of them on for the real low tier. I don't want to say bottom feeders because that's insulting a business person, but all the client files that are really iffy at best and have low revenue. This funding platform allows you to be assured that you're going to get the best offer. They apply one place and they get one offer from many different lenders, and we take those offers and we evaluate them. And sometimes just because it's the highest offer, it's not the best for the client. They may not want $100,000, and a lot of they may only want 20 to get through what they need. They should never take in our industry more than they need. They only should take what they need to get to so they can and use the capital they need today. You don't put it aside for a rainy day. So I hope this really spoke to someone. I don't know if David's on here. He usually likes to comment, but if he's not today, that's fine. But I just wanted you guys to know that this platform is valuable. And sometimes I know, Matt, you and I have had a lot of conversations. We both scratch our heads that B lenders won't even take a file, and then I get an A lender that will give us 200,000 on something that I wouldn't have given 50,000 on, and then sometimes it's the reverse where we think it should be everybody takes it, and they see a file differently. They all have their own algorithms that they work. So I just want you guys to know that I appreciate you. We all do. We don't take questions here on.
Yeah, I just wanted to say, Wade, I am listening. Great job. Beautiful stuff. And I hope everyone understands and takes that. It's hard to put a rule of thumb on every funding. And you've done an amazing job of showing the value of having all the different providers. So great work. Let's get out there and serve some businesses, everybody. Appreciate your call. So congrats on that. And I'm getting us over on YouTube right now, team. So we're going to get started. Hello, everybody. Welcome to today's huddle. We're starting right on time. Appreciate every one of you being here. And my name is David Rutz. I'm going to be today's quarterback. I'm excited to be so. McGuire usually covers Monday. He's actually at the airport right now. We figured it's probably not a good thing to be doing it from the airport in case, you can't get good signal or you have trouble with noise background. So I'm your quarterback for today. I happen to be the president of DAC. Very excited to have that role. And
Because I love business owners. I love helping business owners. I am a business owner at heart. And just like a mother can understand what it's like to be a mother, and a father can understand what it's like to be a father, a business owner understands the difficulties of being a business owner. No guaranteed pay, no guaranteed salary, no guaranteed anything except the responsibility to take care of your family of employees and your family of rent and your family of, and they need business money to grow. And they're most 6 out of 10 are breaking even or losing money, right? And so if they're breaking even or losing money, sometimes they got to borrow to implement a new strategy, a new idea. It's called leverage. It's a tool. It's not debt. It's a tool. Unfortunately, they can't get it at their bank, right? 9 out of 10 cannot get it to the bank. So 6 out of 10 need money. 9 out of 10 can't get it at the bank. That's a huge market open for you to serve. And we come along and show them how they can get funding with revenue. As long as they're producing revenue today, we can get them revenue. And that's spectacular. And then you go a step further and say, not only can we get them revenue, we get them the best offer available through a simple online funding platform that has all the top online funders represented in it. People that you just can't represent these companies. You can't just go to Rocket Mortgage and say, I want to represent your business funding company. You don't even know who their name is, by the way. And then you got to get approved for all of it. And it's very difficult. And you won't get their best offer because you're not doing the volume we're doing. So we come forward, we represent them and all the other top lenders, someone like Capitus. Good luck getting a contract with Capitus. And we've got contracts with Capitus and On Deck Lending and all the best carriers. So when we send them an application, they don't say, hey, you better take ours or quit submitting apps. They go, we'll compete. We'll bring you the best offer. What does that mean? They give us the best offers available. Now, we then take that to the business owner, and you, because you introduced them, you networked them into your application. Our expert team takes over, talks to your client for you, educates them for you. They're not paid on commission, so they're not closing anyone. They're educating, informing, and making sure it's the right fit. And after doing so, your client says yes or no. And then we help them move funding, and they take that leverage then and launch that business idea. That's our solution. That's what we do. So we come along, we give a broker opportunity to brokers who want to make a difference in their family, want to be self-employed, want to earn passive income, want to build an agency. And we put together a funding team to take care of you. So your role is only introducing the client, educating the client, let the underwriting and the team and the qualifications be done by some other expert, and then go out and help others become a broker. That's what we've done. So you can go out and create a passive income source where it's not dependent on a job income. It's not dependent on you alone, but you can have passive income called an income producing asset from your business. That's what we do at DAC. That's what you do as a business funding broker. And that's how we're helping businesses. Isn't that awesome? Now, with that said, you are a broker here at the huddle because today you want to go out. The Monday through Thursday huddles are focused on client acquisition, client education, support, and helping clients get funding. Friday is all about agency expansion, how to grow your business agency, right? So today we're going to talk a little bit about funding, and we're going to go into a story. And then I got a quick huddle tip for you that I'm telling you it's a game changer. It's a game changer. So hang tight for that. Let me open up this story from Wade earlier. The broker is LCG Consulting Solutions. Congratulations. This is unique because 2 fundings from them, same type of company, furniture stores, two came in same day. And that's something. Maybe he's focused on furniture stores. I don't know. Funding success stories. Great example of how the right broker can make all the difference, Wade said. 2 separate furniture stores, both in Texas, which is they've got different state regulations. So you need some pros. We're the pros who can handle that. We know which lenders can operate there, which ones can't, et cetera. What you can and can't do there. Our team's got all that covered. Both businesses had strong credit profiles and averaged about the same, $24,000 in monthly revenue. And that's something. Both furniture businesses doing about $250,000 a year. Location had first furniture store had previously received funding from us, and they returned seeking 20 grand more because they needed to buy other inventory. If you're only doing 24,000 a month and you're buying inventory, you don't have a lot of profit, and you got to pay rent and all that. It's hard being a business owner. So they wanted to buy more inventory. We got them approved for 30,000. They only wanted to buy $20,000 worth. That's all they needed. So they bought $20,000 worth. They took that and had the money just a few hours later. Way to go. Renewal team for LCG Consulting Solutions as the broker. Second furniture store was a brand new request. They wanted $15,000 for working capital. They probably already bought their inventory. Now they need some working capital to cover costs until they sell that inventory, right? After underwriting, the business owner was approved for 20 grand. In fact, they chose to take all 20, and they got funded the same day too. So that's 2 clients funded same day. Gotta love it. Both furniture stores, same broker, successfully guided both merchants through the funding process to apply, helped overcome some communication challenges between our team and the client. So they played their role. They're a concierge. Your job is to be a concierge between your client and the funding team if needed. Many times it's not needed. Okay. So if needed, all within the same day. So great job, Bank Breezy funding team. Great job, LCG Consulting Solutions. Looking forward to sending you 2 commission checks and your enroller and your up team agency. That's how commissions get spread along. So great work. Now, the huddle tip today is their side of the table. Write that down. Their side of the table. You want to focus from the client side of the table. Let me give you an example. I'm going to say something. What do you do, David? We help people get business funding. Is that true? Yes. Is that my side of the table or their side of the table? It's my side of the table. What do you do, David? We help businesses who have great ideas they want to implement, but don't have the money to implement them. We come along and get them the funding they need so they can launch that new idea, grow their profits. So that's what we do. We help them launch that new idea. Their side of the table, how we're helping them. Now, you can say we get someone money. That's true, but it's not complete. It's not the fruit. That is the root. That's the tree. That's what we do. But the fruit is the outcome. Outcome focused is their side of the table. Outcome focused. So as an example, most business owners don't wake up thinking I need to get a loan today unless they're in desperate cash flow situations. They don't think of that. They're not even thinking of ideas. They're not even thinking of new fruitful things they can do for their business. They're managing their business. You don't get up every day thinking how to get a raise. You're managing your kids getting to school. You're making lunches. You're paying this. You've got to drive someone here, get to sports. You don't wake up going, how do I make more today? Unless you're desperate financial. Most business owners are operating their business every day. They're not in growth mode. They may sometimes go home on the weekend and go, I got to do something different. I got to get this going. I'm struggling. So what you want to do is lead off with fruit. The outcome is the fruit. You want to talk about the outcomes they can get and ask what outcomes they've considered. That's their side of the table. And then what do? We support that. So what is their side thinking? Buyer side thinking, their side of the table. It's focused on the outcome they can achieve and talking to them about that outcome and asking about those outcomes. So as an example, have you ever thought about doing things to grow your business? Do you have ideas for what you would do if you wanted to double your sales this year? How would you double your sales? Dude, I don't have the money to do that. Well, what if we got you the money to do that? What ideas do you have? See, we come along and help businesses who have a growth idea already germinated, but don't have the money to do it. And they don't have the ability to get approved at the bank. We come along and get them the money so they can do that. They then go do it. They double their sales and their businesses are forever changed because we were able to get them the money. That's what we do. We help get the money to launch those new ideas. See the difference? So outcome focused. So you ask them, what outcome have you already thought about? And if not, hey, do me a favor tonight. I've said this numerous times and it works almost every time. You don't have an idea today, no problem. Tonight, when you're done working, go home and just write out what your monthly sales are. What are your monthly sales? 40,000. Write that down. And now, if I gave you whatever that number is, additional money, put it in your bank tomorrow. You got to pay it back. And then we're going to charge you interest too, but you got to pay it back. What would you do with that $40,000 to grow your business? Because we can get you that 40,000. I'm almost certain. Same side of the table, their side, not our side, their side. Don't focus on your commission. Don't focus on how we win. I don't like seeing funding stories of how great we are. That's great. We're Bank Breezy's amazing. DAC is amazing. You're amazing. That's all great. That means nothing to the client. What means something to the client is, why did I get the funds? What's the outcome? Why did I tell the story of inventory? Why did I tell the story of working capital? Because they already bought inventory and needed working capital to cover bills. That didn't grow their business. Buying inventory could potentially grow their business. So what I would do if I were LCG, I'd be sitting down with the person who needed working capital. Unless that was leverage to grow their business, I'd be asking, okay, now that we got you that, now let's start thinking of some ideas that you could implement to grow, to double your sales. How do we grow your sales so that you don't need to borrow money for working capital? You make enough on your sales, right? You have gross margin put in there, but obviously you're not selling enough to cover all your bills or you wouldn't need to borrow. So let's not stay there. Hey, no problem. We helped you get through this pinch, but how do we take you to the next level? You know what they'll do? They'll love you for that. They'll love you for that. You're not thinking about your commission. You're thinking about growing their business. You're doing it just like a mom who can't get her kids to school. And you're a mom, you go, hey, have you thought about this or this or this? Or what can we do to help you get your kids in sports? You can't afford that travel team. Well, what if we could help you raise the money to get it? Do you think your kids should be in that travel team? What if we could find a way? You focus on the solution, people will love you for it. So your prompt for today is write down their side of the table conversation yourself. How do you say that? What we do is we help businesses that A, so that they can B, but they can't get it from their bank. So we help them get the money so they can do A and have B. That's what we do. And then you tell a story. As an example, we helped a furniture store just Friday. They applied Friday. They wanted to buy more inventory to grow their business. They didn't have the money to, and they couldn't get approved at the bank or from the inventory supplier. So they either not put more inventory in their store, or we come along and we can get them the money so they can buy the inventory, put it in their store, convert it into higher profit and make more money. That's what we do. We come along and help them. Same side of the story. God bless you all. Have a great day, everybody. Rock and roll today. And we'll see you on tomorrow's Wade Bank Breezy underwriting calls. What chills the underwriters and what thrills them.